Yesterday, the European currency rose above 1.0830 and extended gains as part of an upward correction. As a result, the euro clawed back all the losses incurred last Friday. Yesterday's macroeconomic calendar was bereft of any important news releases from the euro area, which allowed bulls to take the lead. Although traders received better than expected data on US consumer confidence, the euro did not come under strong pressure. It edged slightly lower but then paired its early fall. Today is also going to be rather calm. There are no crucial macroeconomic reports on the agenda. Nevertheless, traders may take notice of the GfK German Consumer Climate Index and US pending home sales. Furthermore, it is worth paying attention to speeches by the representatives of major central banks, including Germany's Bundesbank, the European Central Bank, the Bank of England, as well as the US Federal Reserve. However, they will hardly say something new. As you know, ECB and the Bank of England policymakers stand for further interest rate hikes in an effort to bring inflation down, as their banking systems reportedly remain stable and resilient. This may act as a driving force behind further gains in risky assets, which are the euro and the British pound. And now let's move on to technical analysis. The 1-hour euro-American dollar chart shows that 1.0830 serves as an intermediate support level. A false breakout at this mark will open the way to 1.0874, where bears are expected to regain control of the market. In case of a false breakout at 1.0874, a sell signal will be generated and the euro will slide back to 1.0830. If the price breaks through 1.0830, tests it from the bottom up and fixes below this level, the volume of short positions will increase further. Thus, the euro will drop to 1.0791 and probably 1.0751. At the level of 1.0751, I recommend going long on a rebound to catch an intraday correction of 25-30 pips. Long positions at 1.0830 and 1.0791 can be considered only amid a false breakout. Alternatively, traders may buy the pair if the price consolidates above 1.0874. In this case, the euro is expected to hit a new one-month high, rising to 1.0929. However, this scenario is unlikely as March is coming to an end. If this happens, it would be a wise decision to go short on the rebound at 1.0929, counting on a dip of 30-35 pips. Meanwhile, the British pound has already hit a fresh one-month high, approaching the upper boundary of the sideways channel. The best way to make a profit is to buy the pair amid a false breakout at 1.2296, which will allow the pound sterling to advance to 1.2344. If the price consolidates above this level and tests it from the top down, an additional buy signal will be generated. In this case, the British currency has a chance of rising to 1.2395 and even 1.2443. At the mark of 1.2443, traders are recommended to go short on a rebound. Short positions at 1.2344 and 1.2395 can be opened in the event of a false breakout. Thus, bears will strive to bring the pound sterling back to the middle of the sideways range, 1.2296. If the price fixes below this mark and tests it from the bottom up, it will be possible to sell the pair, counting on a decline to 1.2242 and 1.2192. At the level of 1.2192, traders may consider long positions on a rebound to catch an intraday correction of 30-35 pips. Going long at 1.2242 and 1.2296 will be relevant only in case of a false breakout. Good luck!